All right, so a lot of you guys that know I trade the stock market have been asking me, is it possible to make money? If so, how much do I make? What type of tools do I use? How can you get started? What to look for? How much can you make? All these type questions. So we're gonna talk about this in this video, and also I'm gonna show you the exact strategy that I use to make 1,100 bucks within 15 minutes. I also use the same strategy to make, 800 bucks in less than 30 minutes. So it's definitely a strategy that I use multiple times. It's not like a one-time fluke or anything like that. So let's get right into it. So first of all, let me show you guys, just some proof of what I've actually done. Now, obviously, this is recorded because I didn't want to like log into my account, my real account on air and show my account number and all that. So this is me actually recording me logging into my account with my account number removed and all that. But as you can see, this is today's change, 1,100 bucks. So I made 1,100 bucks. Did this in like 15 minutes. I've done that multiple times. So again, it wasn't like a fluke. You can see I did something similar right here. Made 851 bucks again, like 30 minutes or so. And I can show you this over and over and over again, right? 630 bucks. And these are all from my Charles Schwab account. This is a platform called Streetsmart Edge. This is from a platform right here called thinkorswim. It's from TD Ameritrade. You can see I made like 231 bucks here. Again, all this is very quick within, 15 to 30 minutes. And so we're going to talk about it. Now, the actual tools that I use, as I mentioned before, I use Charles Schwab, Street Smart Edge, and I also use TD Ameritrade Think or Swim. Now, I really like TD Ameritrade Think or Swim. It's my favorite trading platform by far. All those Street Smart Edges and bad, but I just love Think or Swim trading platform. It's a very powerful trading platform. So I can show you some of the reasons and some of the things I actually use in thinkorswim and why I like it so much. But one of the big reasons I like thinkorswim is because this was actually a tool that was made for traders. A lot of websites and platforms they made for investors, like long-term investors. And so if you guys are kind of new and don't know the difference, obviously a long-term investor is somebody who makes buy Apple stock, right? And they'll hold it for a year or two or three and see if it goes up, which is a good strategy. But for traders who like we buy a stock today, we out on the same day, or we buy a stock today, we out tomorrow. We need something that does have a little bit more depth and a little bit more insight, and so that's where thinkorswim comes into play. It's a tool that was made for people that's doing a lot of trading and just not long-term investing. So let's look at some of the features. One of the real reasons that I love thinkorswim so much is basically they have this risk profile. And so what this risk profile does is basically you can use this to actually calculate, how much you'll make, how much you'll lose if a stock price move in a certain direction. So I can give you an example here. So let's say I buy a vertical spread here, and this is the SPY, and this is option, by the way. And so basically what it says is, hey, if I buy this vertical SPY at 343, right? And if it moves this way, if it falls down to 322, then I lose 70 bucks. If it goes to 371, then I make 30 bucks. So basically you don't have to do any type of guessing. You don't have to, pull out your calculator and start calculating or anything like that. It's all done for you. The analysis, what you make, what you'll lose if the price moves this direction, if it moves that direction. So that's a great thing, especially if you're trading like options and you're doing like multi-lag options, you're doing spreads where you use the multiple, you buying options, you selling options, all that can kind of get kind of complicated to kind of calculate. So this does all the calculations for you. You ain't got to guess. You know, hey, if it moves to this price, this is how much I make. If it moves to that price, that's how much I lose. So I love that about Thinkorswim. The other thing I like about Thinkorswim is it got a lot of powerful indicators. And so, for instance, if I come down to studies, I do edit studies. So a lot of you guys ask how do I know when to get in a trade? How do I know how to get out of a trade? What do I trade? Why do I trade it? All these type things, right? Well, I would start out by saying, now usually I trade the FANG stocks. For those of you guys that don't know, those are basically the big technology companies. So there would be your Facebook, there would be your Amazon, there would be your Netflix, there would be your Googles. Also, they call it FANG Man sometime. You can add on to those. You can add on to like Microsoft, Apple, um, and Nvidia. So basically all the big tech stocks, right? So that's normally what I trade. But lately, I've been trading the SPY. And the reason I like to trade the SPY is number one, I like to trade options. For you guys that don't know what options are allow you to buy stocks in a contract. But what you're doing, you're just buying a contract that says you have the right to buy, a certain stock, but you don't have the obligation to buy it. And that's very powerful, especially if you're trying to, buy stocks like Amazon and Google, which can be very pricey, right? So basically, you buy a contract that's going to be way cheaper than buying, Amazon or Google stocks outright. So you buy the contract, right? The contract give you the right to buy those stocks at a certain price, but not an obligation. So if you buy this stock and it goes up, then obviously you want to take advantage of that. And that's what the option contract to do. It gives you that right to do that, but it doesn't give you the obligation. So if the price drop, you don't have the obligation. So only thing you will lose if the price go down is you will lose the price or whatever you paid for the contract. And I'll make a course on like options and that type of thing because I know a lot of you guys been asking me how options work and all that type stuff. But but if it goes down, you won't necessarily lose the full value of the option contract because you can always sell early, or you can hedge it by buying an opposite type contract. But we'll get into all that later. That's some stuff that's kind of advanced, not really for this video. So back to what we're talking about here. One of the reasons I love Thinkorswim, right, is because it has so many different indicators. And again, a lot of you guys ask me, how do I know when to get in a stock? How do I know when to get out of it? That type of thing. Well, one of the things I use is RSI. And let's do that again. Add selected. Okay, apply. And let's do another one. Let's do another one I like is Bollinger Bands. So these are two of my favorite indicators. Now, to be honest, you don't really need these, especially if like you trade the stock market every day and you kind of know what the price of the stocks are. So you kind of know when they're going low and kind of know when they're high. So you don't really need these indicators, but they're nice to have, especially if you're someone that don't watch the stock market all day, every day, and you don't know the price of the stocks. Then that's what the Bollinger Bands and the RSI can kind of do for you. And speaking of that, so how do you make money in the stock market? Well, it's very simple, right? It's kind of like you would make money doing anything else, right? If you wanted to sell umbrellas, how would you make money? Well, obviously, you would need to sell them at a higher price than what you bought them for. So if you bought them at $10, then you would sell them at $15. You would make a profit. It's the same thing with stocks. There's no different, right? You want to buy low and sell high. Now, of course, the key is how do you know what's low and how do you know what's high? And that's where these two indicators come into play. So basically, looking at, man, let's pick something different for now. Let's take a look at Apple. So Apple right now is trading at 499.30. And so this Bollinger Band is basically saying, this is the low price for Apple. This is the high price for Apple. And this is basically what Apple's been, this average price in the last 20 days. So again, like if you want to make money doing anything, you would buy low and sell high. So how would you know what's low for Apple? Well, the Bollinger Band is saying, hey, 382 right there would be a low price for Apple. It's saying like what 505 right now would be 508 right now would be like a high price for Apple. And the highest has been it's like 515. And if we take like the average price the Apple's been at for the last 20 days, it's been about what is this about 450. So that's kind of how you would know what's high and what's low. The RSI kind of tells us the same thing here. Basically, and you can customize this, but I kind of left mine at default. So basically, this you see this is a 70 line, and this is a 30 line. So basically, anything that's over 70 is saying, hey, a lot of folks actually, bought Apple, and this is basically what people when people say overbought, this is a lot of times what they're looking at is like the RSI. Anything over 70, but anything especially over 80, it's like considered overbought. And the theory is going to be if it's like 80, then it's going to reverse, right? If it's below 30, then it's going to reverse. And to expound on that, if it's above 80, it's going to reverse coming back down, right? Meaning that too many people have bought it, so you're going to see a sell off, and it's going to come back down. If it's below 30, then it's oversold, meaning that it should reverse going back up. So this is you can kind of use these two indicators to see if a stock is high or low. Now again, these are just indicators. These are no guaranteed, right? I mean, there's so many factors that play into it, and we'll get into that as well. But this is just give you a general idea if you're buying low, if you're buying high. But I mean, there's a lot that goes into it. For instance, earnings, right? When the earnings come out, right? if Apple come out and make a killer earning, then you can kind of forget about these type indicators, right? Because if Apple was selling at $4.99 and today was the earning, they came out with just a killer earnings with killer guidance, then it's going to shoot up much more than this upper limit of the Bollinger Band. Same thing with the RSI. Likewise, it's not just about Apple, right? It's also about, the economy, what's going on with politics. So that's why you have to keep up what's going on there. For instance, like Apple is not just like a separate entity by itself that's separated from the rest of the world. Obviously, if the economy is doing bad, then the theory be, obviously, people don't have the money to spend. So normally you would think the price would go down, although currently right now what we're seeing is that's not really the case. But I'm just saying in general, you have to take in the economy, you have to take in all type of stuff. So don't just look at like indicators. That's why a lot of people trip themselves up. They're just solely focusing on indicators. Where the indicator says buy, indicator says sell. Well, you can't just focus in on that. There are other things you have to take in consideration. But we will definitely get into that. But as of right now, this video is getting kind of long. So what I'm gonna do is I'm gonna make a part two of this video, and I'm gonna go into the exact strategy that I used to make those 1,100 bucks, to make that 800 bucks, to make that 600 bucks that I showed you earlier in the video. And keep in mind, I made all those within like 15 to 30 minutes. But yeah, I will see you in part two, and I will get into those exact strategies. Talk to you then. Bye.